The role of infrastructure in supporting these SMEs cannot be overemphasized. In my village, well, these days when you say village, you actually wonder, we have about 3 commercial banks there, so I don't know about being village. But the major federal road that went through that place was done in 1979 by the Shagari administration. And then after a while, that road went very bad. And I'm just trying to talk about the role of infrastructure in MSMEs. It went bad, and it wasn't fixed until, I think it was towards the end of Obasanjo's administration, and then Jonathan's government completed it, right? But what am I saying? A state governor, therefore, started, building roads all over the place. So 2 roads crossed this particular town. What do you have? Suddenly, my village is 1 hour from Onitsha, right? If you wanted to build a house, even if you wanted to buy door locks, switches, you drove to Onitsha. Suddenly, people started trading in that place. It's now a huge market. To drive through, now you have a lot of traffic. There are about 3 brothers that are from there. After school, their father used to own a pharmacy, a chemist, not even pharmacy, you know what I mean? So because of this infrastructural development, they stayed back there. They started expanding that pharmacy. It translated to a big supermarket, and then College of Education was sited there. And they started building hostels for the College of Education and their supermarket. So those guys are having better quality of life than their colleagues who migrated to this same jungle called Lagos that all of us have cramped. I mean, if you go to Lekki and Festac, you would actually begin to wonder. So this is how we identify where to put the money.
Really, Nigeria should look at a policy of investing bottom up. What I see that the country does is invest top down. We look at the big infrastructures, the big companies, just as the speaker talked about commercial banks. And we now expect a trickle-down growth to the micro and small businesses, whereas they constitute, I say, the largest sector in the Nigerian economy. Now, when we talk about economic growth, who are we talking about? Who would experience this improved economic standard of living, access to education and health? It's the average Nigerian. And over 80% of the Nigerian population lives on less than $5 a day. The other statistic I wanted to talk about is the projected growth in terms of population in Nigeria. The World Bank, World Population Growth Commission estimates that Nigerians will be 400 million by 2050. That's adding, when you account for deaths and so on, 250 million people between now and 32 years' time. A majority that will be youth. So even though we are having youth unemployment today, that is 70 million youths, imagine what we will be like in 2050. So we are really sitting on a ticking time bomb. What we need is not a trickle-down growth, but a tsunami that starts from the bottom up. How do we invest in small businesses to ensure that they can increase employment? Sweden estimated that there are 37 million micro and small businesses. 98% of them are micro businesses. On average, they employ 1.6 persons. And that accounts for 84% of Nigeria's employment. So imagine if we can grow the employment on SMEs from that 1.6 to 3 per person, per business. You already have 120 million people employed. In fact, I feel that if we now push it to 5, what we will be facing will be a shortage of skilled manpower. So to me, there is no option but to invest in growing our micro and small businesses. What is the funding gap? That same Sweden report assessed how did these businesses start, the 37 million that was surveyed. For micro, they started on less than 50,000 naira each. The medium, small and medium, started on an average of 10 million naira or less. So let's say each of these businesses need at least 1 million naira in financing. And I note why I'm using financing, because the emphasis in Nigeria just sort of keeps talking about credit alone. To me, SMEs need more than just credit. We need equity, we need guarantees. The whole gamut of what we offer big businesses is what is needed for small businesses. So, back to my point that if they need 1 million, that is 37 trillion naira funding that is required for micro businesses. And the speaker talked about what credits have actually been given to the private sector. And I know that includes the large businesses. To micro, small businesses, there's actually been a constant decline in funding to micro businesses. My passion and my history has always been with microfinance bank. There was an exercise I did, 10 years of microfinance banks in Nigeria. We combined the total assets of the microfinance industry. This is an industry that is supposed to specialize in funding small businesses. In total, we were 1/3 the size of First Bank, more or less equal to Unity Bank. If we are really serious about funding micro businesses, should that be the size of the entire microfinance industry when there's a funding gap of almost 37 trillion naira? So one of the key issues is how do we grow specialized institutions that focus on financing micro and small businesses? The microfinance sector being one. If you look at India, the Prime Minister himself has been the advocate for growing and developing the microfinance sector. They set up a microfinance investment and development fund to provide equity to the microfinance sector so that those microfinance banks have access to capital that they can then lend to micro businesses and small businesses. Today, people say Africa is the face of poverty. 1 in 5 Africans are Nigerians, so more or less the face of poverty seems to be Nigeria. India, now no longer. It's true, the statistics show that Nigeria has the largest number of people living in poverty, no longer India or Asia. What were they able to do? And I would say that when you check economic growth across those emerging economies, those that have been able to consistently grow have actually used microfinance and access to SMEs to grow. There's 2 reports that I would want you in your spare time to look at. One was the speech by the President Roosevelt during the Great Depression in America, and he talked about a magic bullet for economic growth. And he was talking about investing from bottom up. When we invest in infrastructure, who do we give those contracts to? I'm not saying you should give it to only SMEs, but make sure that the average Nigerian is involved in earning income, in construction, and so on as well. And SMEs, this local content issue should also be in place. 2, I feel that we should create a microfinance investment development fund, or you could call it an SME development fund. And it is not only for loans. One of the things that I feel is that we need to develop the venture capital industry. SMEs, for them to transit from micro to small, then to medium and big, need long-term patient capital. It can't be loans alone. Loans are critical, don't get me wrong. It's the first easy go-to to address the financing gap, but we need to deepen that market beyond that. How do we do that? Partner with venture capital firms. Interestingly, when I look at sectors that have been growing, I haven't done the research like Bismarck Rwani, but we talk about Nollywood, we talk about fintech. These are areas that I see very little, minimal government intervention, and these industries of their own valuation have grown. So I hope it's not a case that where government intervenes, growth doesn't occur. But I feel that what should happen is that government, like the speaker talked about, where are we investing in? What are we investing in to spur growth? And how are we doing it? There are 36 different interventions that government has done since 1960 to date in SME. I won't say they totally failed, but with mixed success. Government keeps coming on with subsidized interest rates that are not realistic within the market environment. Then too much intervention telling us, okay, this is what we should do and how we should lend it. We need to identify the critical industries that we feel Nigeria has comparative advantage on, and the speaker alluded to those, and create funds that are specific to investing in those SMEs. So, lastly, I just want to conclude on one thing that the speaker talked about. He said, you reap what you sow. I want to argue that in Nigeria, SMEs and micro businesses, unfortunately, are not reaping what they sow. And I will try and give it an analogy that you plant a seed in this fertile land, yet the rain doesn't fall, or there's locust that comes and eats up all the vegetation, you certainly will not reap what you have sown. And that is what is happening to SMEs. They are working hard. I mean, over the years that I worked in Axiom Microfinance Bank, I have to take the lead from Fidelity to market some organizations I'm passionate about. We have actually invested and provided funding to micro entrepreneurs. They've grown their businesses, but they can do so much more. The statistics on the 37 million micro businesses show that they've remained stagnant. The reason why we have 98% is that they've continued to remain micro. They are not growing to become small and medium. We are sitting on a ticking time bomb. Something needs to be done. Thank you. Basically, as I mentioned during the speech, was that the total capitalization of microfinance bank is more or less the equivalent of one commercial bank. We need more money. And I know that the CIBN is working on actually increasing the capital requirements, but there's a debt of funding. So if there's a microfinance investment development fund that pools funding, both international investors, governments should also put money in, so that microfinance banks can then access it for equity investments in microfinance banks as well as for on-lending. And there should be a selection criteria, of course. Like microfinance banks that have a track record of performance, good corporate governance, and have actually lent money to the micro and small businesses should have access to that fund. I feel that it will significantly increase the impact of microfinance banks to be able to on-lend to that sector. It's been done in India. It worked fantastically well. The same should be replicated here in Nigeria.